Welcome back to the channel, everyone! Today is one of those rare moments where you truly need to pay attention because the financial world just received a shockwave. And if you blink, you might miss it. Both the Central Bank of Iraq, CBI, and the State Bank of Vietnam, SBV, have officially announced major policy shifts regarding their exchange rates, and the language they used is full of subtle but powerful signals. This is not a simple update. This is a potential turning point for the Iraqi dinar and the Vietnamese dong, and possibly for the entire regional and global financial markets. Traders, investors, and everyday citizens alike are asking the same question: what does this mean, and why now? In this video, we're going to break it all down piece by piece, from the specifics of the new policy frameworks to the hidden signals these central banks are sending. You'll understand why this is historic and why everyone should be watching closely. Grab a notebook, stay focused, because what we're about to discuss could shape the next big chapter in global finance. Let's start by understanding what actually happened in the last 24 hours. Both Iraq and Vietnam's central banks made official public announcements outlining new exchange rate policies for 2025. This isn't speculation or rumors anymore. It's confirmed action coming straight from the top authorities in each country. The CBI in Iraq specifically mentioned moving toward a flexible but stable exchange rate system that better reflects true market value. The SBV in Vietnam echoed this by stating their controlled floating rate will allow the currency to more accurately reflect supply and demand while strengthening the national economy. The words used might seem standard at first glance, but in central banking language, they are loaded with hidden meaning. Phrases like reflecting true market value and preparing for a stronger regional role are signals of major upcoming currency adjustments. This isn't about small tweaks. This is about laying the groundwork for substantial changes in the dinar and dong. Why is this so important for Iraq? For decades, the Iraqi dinar has been tightly controlled by government policies designed to keep the currency stable, but also artificially low. This approach limited the dinar's ability to adjust naturally in response to market forces. With the new announcement, the CBI is signaling a shift toward modernization, transparency, and readiness for a more open market. They mentioned that technical preparations are complete, including updates to foreign reserve management, cross-border settlement systems, and banking infrastructure. These are not minor operational upgrades. They are foundational systems that must be in place before any significant currency revaluation can occur. Essentially, Iraq is telling the world that the dinar is ready for a new era, one where it can be traded and valued closer to its true economic strength, rather than remaining locked behind government controls. Vietnam's announcement is equally significant. The dong has been historically kept lower to maintain export competitiveness. Now, the SBV is stating that their new system will let the currency breathe, allowing it to rise in value according to market forces without destabilizing the economy. They highlighted record foreign reserves and strengthened trade relations, which indicates they have prepared an economic environment for this move. By mentioning their readiness to play a stronger regional role, Vietnam is signaling ambitions beyond domestic stability. They are positioning the dong as a competitive player in the Southeast Asian and global financial markets. The alignment between Iraq and Vietnam's announcements is not coincidental. Analysts worldwide are noting the timing and consistency in language as a hint that coordinated global strategies may be at play. Let's talk about why the timing of these announcements matters so much. Historically, central banks don't make public statements about policy shifts until months, sometimes years, of groundwork are complete. Iraq and Vietnam have been quietly working with international financial institutions, including the IMF and World Bank, preparing for reforms behind closed doors. Reports suggest that both countries have reached critical milestones in stability, banking modernization, and reserve management. The public announcements we're seeing now are the visible tip of the iceberg, a signal that the next phase is ready to begin. These aren't just words, they're a coded message to global markets. The conditions are right. We are prepared. Watch closely. Traders and investors interpret these statements carefully because they often precede actual currency adjustments, sometimes within days or weeks. Let's break down the reactions in global financial markets. Within hours of the announcements, trading volume for both the Iraqi dinar and Vietnamese dong spiked significantly. Forex platforms reported some of the highest activity in months, indicating that international traders are already positioning themselves for possible future adjustments. Banks in Asia and the Middle East reportedly began updating internal systems to align with the new policy guidelines. While no official exchange rates have changed yet, these preparatory actions suggest that the infrastructure is ready for immediate implementation when the central banks choose to adjust. This is exactly the kind of activity you want to watch. If you're following currencies closely, the groundwork is being laid and the market is already responding. Experts are divided on what exactly these policy changes mean in the short term. Some economists argue that the changes are purely operational, focusing on modernization and banking stability rather than immediate rate adjustments. Others see it as the calm before the storm, a preparatory step right before a significant revaluation of both currencies. Statements from financial analysts in Dubai, Singapore, and London suggest that coordinated announcements like these are rarely coincidental. Phase 2 of a revaluation process typically begins with system modernization, infrastructure updates, and market communication, exactly what we're seeing now. In other words, these official announcements could very well be the green light for the next step in both Iraq and Vietnam's currency evolution. Let's dive deeper into Iraq's recent efforts to prepare for this moment. Over the past year, the CBI has implemented multiple projects to strengthen the dinar's position. These include stabilizing reserves, tightening currency smuggling controls, and completing digital payment reforms. Most notably, the deletion of zeros from the currency, a project aimed at modernizing the dinar, was recently confirmed complete. Each of these steps was designed to clean up the currency system, reduce corruption, and enhance international credibility. Now, with the announcement of the new exchange rate policy, all these measures align perfectly, signaling that Iraq may be moving toward a higher, more realistic valuation for the dinar. This is not theory, this is observable preparation for something bigger than everyday fluctuations. Vietnam's preparation story is remarkably similar. Over the past several months, the SBV has steadily increased foreign reserves, managed inflation carefully, and expanded international trade partnerships. They have also integrated into digital currency settlement networks, which allow for faster and more efficient cross-border payments. These steps point to a single objective: global integration. By modernizing systems and increasing economic stability, Vietnam has positioned the dong for potential upward adjustment. The new policy announcement acts as the public acknowledgement of these efforts and provides investors and traders with a signal that the dong's value may soon reflect its true economic potential. In short, both countries are sending subtle but powerful signals to the world. The stage is set. Now, why are global analysts so focused on this? Iraq and Vietnam are resource-rich, strategically located, and economically influential in their respective regions. The timing of their policy announcements coincides with broader global financial realignments, including shifts in commodity pricing, trade flows, and monetary policies in major economies like the US, China, and the EU. Adjusting their currencies now positions both countries to take advantage of these shifts, potentially increasing foreign investment, regional trade influence, and domestic purchasing power. The fact that these two nations are moving in sync suggests a deliberate strategy rather than coincidence. Observers around the world are watching carefully because coordinated currency modernization by emerging economies can have ripple effects across multiple markets. It's important to understand mechanics behind what's about to happen. Even though official rates haven't changed yet, the announcement is effectively opening the door for a new phase. Central banks will now begin to monitor market reactions, align with regional financial institutions, and finalize technical systems. Once these steps are complete, official rate adjustments can be implemented. Timing is key here. While no one knows the exact day these changes will occur, historical patterns from IMF-backed reforms suggest that adjustments typically follow within days or weeks. This is exactly the point where experienced investors start to pay attention. They know the early signals often precede significant market moves. Social media and online forums are already buzzing with speculation. For years, long-term holders of the Iraqi dinar and Vietnamese dong have been waiting for confirmation of meaningful reforms. Now, they see this announcement as the validation they've been hoping for. Screenshots, analyses, and discussions are circulating widely, reflecting excitement and anticipation. While the official rates are not yet published, this public acknowledgement from the central banks carries enormous psychological weight. It signals credibility, preparation, and readiness to step into a new financial era. For many, this is proof that the buildup over the past years has been leading directly to this moment. What happens next is crucial. Both Iraq and Vietnam's central banks will now begin the final preparatory phase, ensuring that internal systems, regional partnerships, and market infrastructure are aligned. This phase is all about stability and coordination. Banks will run simulations, update their rate windows, and prepare for immediate adjustments once conditions are deemed stable. This is the quiet but decisive period that sets the stage for official rate releases. Investors, traders, and holders of both currencies should understand that this isn't about immediate, overnight changes. It's about the methodical preparation that makes a successful revaluation possible. Let's consider the potential impact. If Iraq releases a higher dinar rate, it would instantly enhance the country's regional trade power, increase investor confidence, and provide citizens with greater purchasing power. Vietnam's dong, if adjusted similarly, could attract major foreign investment and strengthen the nation's role in international finance. Together, these two moves could act as a domino effect, encouraging other developing nations to consider similar adjustments. This is why analysts emphasize that this is not just a local event. It is a global financial signal. Both nations are stepping up, and the world is watching closely. It's important to note that while excitement is high, patience remains key. The announcements mark readiness, but not implementation. Central banks operate carefully to avoid market instability. This means monitoring foreign reserves, inflation, trade balance, and investor sentiment. Rate adjustments, when made, will be calculated and gradual, ensuring stability while allowing the currencies to appreciate naturally. For anyone following the dinar or dong, this is a critical moment where understanding the signals matters more than reacting impulsively. Strategic observation now could provide major insight into future movements. The role of international institutions cannot be ignored. Both Iraq and Vietnam have worked with IMF, World Bank, and regional trade partners to meet specific stability targets. Praise from these institutions is more than ceremonial. It reflects real compliance with international standards. The central banks are now operating within a globally recognized framework, which reduces risks and increases confidence in potential currency adjustments. Investors should view this as a positive foundation. When policies are coordinated with global institutions, the likelihood of successful, stable revaluation increases dramatically. For Iraq, the CBI's modernization strategy has multiple layers. Beyond the immediate exchange rate system, the central bank is working to integrate digital banking, streamline cross-border payments, and ensure regulatory compliance with international standards. All of these efforts contribute to a stronger, more credible currency. When the official dinar rate is eventually updated, the impact will not just be numerical, it will be structural. The dinar will enter the global market as a more stable, trustworthy currency, capable of participating in international trade without the artificial limitations that have historically held it back. Vietnam's SBV is following a parallel path, strengthening foreign reserves, maintaining low inflation, and modernizing banking systems ensures that the dong is ready to meet global financial standards. The controlled, floating rate allows flexibility while protecting against volatility. This approach balances opportunity and risk, positioning Vietnam for long-term economic growth. When official adjustments happen, the dong is likely to experience a significant uplift in both domestic and international perception, encouraging foreign investment and reinforcing the country's strategic position in the global economy. Now let's talk about the hidden signals that financial insiders are interpreting from these announcements. Phrases like reflecting true market value and preparing for a stronger role in global finance are rarely used casually. They suggest that both central banks are ready for substantial upward adjustments. Combined with recent technical and operational upgrades, these signals indicate that the groundwork for change is complete. It's like a green light flashing silently for those who understand the language of central banking. The next chapter is coming, and it could be transformative for both Iraq and Vietnam. The global implications are significant. Adjustments to the dinar and dong could influence trade balances, currency flows, and investment decisions throughout the Middle East and Southeast Asia. Other developing nations will be observing closely, potentially inspiring similar reforms in their own countries. For investors and traders, this period is about observation, patience, and careful analysis. The initial announcements are just the start. As the central banks gradually implement their new policies, we can expect further waves of market activity, discussions on the international financial institutions, and perhaps even preemptive adjustments in other emerging currencies. To summarize, today's announcements from the Central Bank of Iraq and the State Bank of Vietnam are historic. Both nations have publicly confirmed new exchange rate policies aimed at modernization, flexibility, and accurate reflection of market value. Global markets are reacting, and technical systems are already being updated in anticipation of future adjustments. While official rates are not yet released, the hidden signals in the language, timing, and coordination of these announcements suggest a major currency event may be imminent. For viewers, traders, and anyone following the dinar or dong, this is the moment to stay alert, keep an eye on official updates, understand the signals, and be ready to witness a historic step forward for both Iraq and Vietnam in the global financial arena.